Hello guys and welcome back to another YouTube video. And today I'm going to be breaking down a trade that I took on the 1st of July. It's a beautiful sell position into the market gap. So without further ado, let's get into the trade and let's break down this analysis. So starting off, I'm on the 1 hour chart, and I'm basically want to pinpoint reversal points, key levels in the market, which I can see basically price reverse from. So let's get into it. So firstly, I want to see my dealing range. Where is price at in the market? Where are we heading to? Where are the price levels, etc., etc. So from this swing high down to this swing low, you can clearly see the two halves. We've got the upper half here and we've got the lower half. As you see in this lower half here, we were accumulating, we were moving sideways, price was deciding what to do. And then we had a strong rally that actually came in and closed above this 50% equilibrium mark. Okay, this equilibrium mark also lines up perfectly with this balance price range here on the 1 hour. Let me just draw that in. Okay, so all the way across here like so. Okay, so if anyone doesn't know what balance price range is, let me write it down. So a balance price range, also known as a BPR. Okay, I'm pretty sure if you see my stuff, you will see me mention this time and time again. So essentially, a balanced price range is when there's inefficiency either side of the candle on a move up or move down. So for example, this move up, you see this candle here on the 12th of June at 1 p.m. Obviously, news must have came out. Strong bullish impulsive candle, leaving inefficiency either side of that candle. Okay, price then comes back down, and this move downwards, there was inefficiency on this candle here, almost replicating the same move up. That gap in the market is something called a balanced price range, when a move upwards and then a move downwards, or vice versa, a move downwards and move upwards. If we leave that inefficiency there and they coexist next to each other, that's something we call a balanced price range. Okay, as you can see, price tapped into that to perfection, to the 50%. Okay, so from that, I'm then getting an idea in my head that we just came into a premium level in the market. We came into balanced price range. So from high and time frame narrative, there's lots of confidence here to actually look to short from this area in the market. Okay, short term. If I draw your attention to here as well, we also saw the market gap. Okay, so the market gap, all those points, about 320 points, which is a good market gap. And normally what we see happen, we see price fill this gap and then we see price move away. So this is always playing in the back of my head. Monday open, we see price rally all the way up to that balanced price range. We see price come into that equilibrium. We start to sell off and we've got this market gap. I'm going to see how I can pinpoint a location in around this level here to then look for sells into this market gap. Okay, so let's look on the smaller time frames how we can have done that. Let's go on the 3 minute. Perfect. So we're on the 3 minute. So look, you can see that market gap there on the 3 minute there. So now we're looking at Asia range, okay? And what I normally like to see during Asia range is something called accumulation, manipulation, and distribution. But we need to see displacement as well from the higher time frame POI. So let's break it down. So we had an Asia range here. So we've got Asia low liquidity here. So that's also a great target to look for price to go to. Asia low liquidity here. To that bottom right. Then we also have the Asia high here. Great liquidity points in the market where we want to see price basically sweep and move from. And this would be Asia high liquidity, okay? Cool, perfect. So we have these points and we either want to see buy side get swept, and then once we see that buy side get swept, i.e. Asia high getting taken, we don't want to see the reversal to either take the Asia low liquidity and further and fill this gap. Okay, so that's always playing in the back of my mind. Once we see one buy side, we're looking to take sell side. If we see sell side, we're looking to take buy side. Okay, so we need to take close attention to this move here. So we see price from here start to move sluggish. As you can see, sluggish. Now this is a build up of orders coming up into this high. Okay, this channel. Okay, this can be seen as accumulation. Price is correcting, it's accumulating, it's ranging coming up into this high. Then we have a strong pulse into that balanced price range. Okay, this can be seen as a manipulation. So this we call the accumulation phase when price is accumulating. Let me write an A there for accumulation. And then here, we call this manipulation, when price manipulates from that level in the market, okay? So manipulation is basically a sweep up to take the buy sides, then we want to see price displace. Once you see price displace, then we have confirmation that we basically can look for further sells in the market. And price displace when we have a market structure shift, okay? Market structure shift is when price takes a low that basically took higher or took the buy side liquidity in this market. So this low here gets taken, indicating to us there's a market structure shift taking place. Price is shifting. It's indicating to us price now wants to go lower. Once we have the left side of this done, so I'm drawing this vertical line here so you can understand. Once we have everything on this side of the market ticked off, checked, multiple conferences, accumulation, Asia high sweeps, market structure shifts, then we can go on to the right hand side, which to me, in my personal opinion, this should be systematic. You shouldn't really have too much thought process when going into taking these types of trades, because everything's done on the left hand side. Now we're just letting price play out, okay, using our probabilities in our favor. So what we can start doing is taking this swing high to this swing low, and we can start looking for retracement levels into here, okay? So from the swing high of this to the swing low, about there, let me just take off that, and those two can stay on. We have something called the OTE, which is something I like to call the optimal trade entry. Let me write that down. So OTE, optimal trade entry. And essentially all that is the most efficient way to look to get into this market. Now what many people do is they look to sell too early, and this is basically fear. Your fear that you're going to miss out on a trade, your fear that the price is going to go without you or head to the direction without you, which some cases it does. But we need to stack probabilities in our favor. And after backtesting, after looking at the markets for the last 8 years now, I've gathered data, and basically within the 0.62 and 0.79, this is known as optimal trade entry. The probability of a trade coming into this level and then reversing after having a market structure shift, after accumulation, after manipulation, is quite high probable trade, which we want to obviously utilize. So stack that with other confluence, we can then look at this leg and see if any other basically places or areas in this market where we can look to take a trade. And there was actually a beautiful balance price range that came through here. So if I look at this move here, there's inefficiency on this candle here and inefficiency on this candle. So if I just push that all the way across here like so, you can see that this balance price range here, like I said, balance price range are so key. Make sure you're looking out for them in the market. That comes all the way across here. That lines up with the 0.79, which is the upper top half of the OTE. This is a extremely high probable trade, okay? Extremely high probable trade. And that's when I was actually able to take the sell position from. So once I saw all that stacking in my favor, the sell position was taken here. Now, what I normally do is obviously stop loss above the most recent high, okay? So, and my SL needs to be above it. SL above recent high. Okay, in this instance, that's the most recent high. And as you can see here, people go really tight. I don't really like going really tight. I like giving myself a bit of breathing room. So now I must have about 1.5 pips. So that would be about 65 pip SL. Just because broker commissions, all these things that can stack up against you in your favor. So that being said, that was the entry, and then obviously targets. Now I'm looking to potentially get out of this trade, because it's almost just as much as important to get into the trade and set SLs. It's just as important to know when to get out of the trade. Okay, that's extremely important as well. So in this instance, I had to take into consideration the higher time frame narrative. Okay, and as you can see here, we had this market gap. This is a beautiful area to basically target. We want to see price come into this area. We want to see that get filled, okay? So in that instance, Asia low you could have target, but for me, the right TP was that one standard deviation, which I use time and time again. And that lines up perfectly with about 50% of this move, and it also comes up into this recent high, as you can see here with that box. Okay, there. So there's a lot of reasons why price would want to come back into here. Now, if you look at 2 standard deviation, this is all the way down back here. This is a large target. Is price going to potentially come all the way down here? Probably not, but we want to see price at least fill this market. So this TP made sense. It was a great TP, and obviously the risk reward is phenomenal on this trade. So now let's just let the trade play out and see how it goes. Okay. Perfect. There you go. Okay. And that's your TP right there. Now, trade management. How will I manage a trade? Now, I do move my SL to break even once trade has basically delivered. I probably take out another low in the market, as you can see here, taking out that low. But because my entry was so basically pinpoint, I'll put a screenshot of the entry here just so you can know exactly where I got in. This spike up move here didn't actually get us out at break even, and then we allowed price to rallied all the way down to 1 standard deviation, and that's the full TP. Okay, so not only are we using the higher time frame, balanced price ranges, premium levels in the market where we're above that equilibrium to look for sells, we're then going down on a smaller time frame once again to pinpoint these entries. Okay, and then what we're doing one step again, we're waiting for that accumulation phase to take place, waiting for that manipulation, displacement, market structure shift, price pulls back, and then we're looking for that 1 standard deviation TP. Okay, rinse and repeat. Use this system time and time again, and I'm very confident using the right risk management tools, using the right psychology, you can too utilize this in your trading and actually see some profits from this market. Okay, so look, if you want to see more content like this, please like, share, and subscribe, and I will see you in the next video.